Good morning, ladies and gentlemen. Happy Tuesday to you all. Today we're going to be reviewing the pharmaceutical sector, going over the top 5 companies, and those companies are going to be JNJ, Lilly, AbbVie, Merck, and Pfizer. So without further ado, let's get into the video, starting with JNJ. So if we look at the daily chart for JNJ, we just bounced off our 200 weekly moving average, which is a very strong bounce, thus leading me to believe that maybe this bounce will hold, but we have to look at the sum of whatever the chart is telling us, not just bits and pieces. So you did have a bounce off of the 200 weekly with large bullish volume. It wasn't a small bullish volume. You basically peaked out to the same amount of selling pressure, and you had a big body to the candle, which means that buyers were able to step in, buy up the company off of there, and continue and hold that region, especially having a nice move on the day of 1.36%, but you did gap down, so it's definitely a strong showing from the buyers. However, this could be a dead cat bounce that where you come down, dead cat bounce, probably hit like 162 and then a break down lower. Another thing that I'm noticing on the chart here is you have a head and shoulders pattern right here. So for all those that don't know what head and shoulders are, basically left shoulder, head, higher peak, right shoulder forms a base here. And the way that you calculate where this is price targeting to, you basically draw a base at where all the points are connecting. Rough area. It doesn't have to be the most perfect thing. It gives you a general price target. We draw from the head to the base, take that line, put it to where you broke the base, price target of $136 for J&J, which would indicate that we are going to most likely break this 200 weekly moving average. But like all things, you have to wait for confirmation of the thing before it actually happens to take action. Now let's hop over to LuxAlgo to see what it's telling us on Johnson & Johnson. So as we can see here, we are in a reversal zone with a price action zone on the daily. The RSI is in oversold territory down here, and we are kind of converging on the MACD towards the bullish side, so this definitely could be a bullish bounce. However, we do have a selling zone around the 165 area, so it kind of plays into that. We could come up here, bounce, come back down, retesting the zone, and break lower, breaking below the 200. I could see picking up Johnson & Johnson in this area to see how price interacts with here. So if you pick it up here, push up into this area, you're seeing selling pressure, maybe get out, take profit, or you're trying to dollar cost average down. That could be another thing. Another location that you could pick up the company and put a buy order at is probably 151, 152. And if we look at that 136 area, we really don't have anything on the daily, but let's hop over to the weekly to see what it is telling us. So the weekly, if you look at the 136 level, you do have a price action zone deeply into that reversal zone. So I definitely could see the price coming down to this area because it's naturally going to get attracted to this. MACD on the weekly is significantly diverged bearish, along with RSI has a significant more downside it can go. You can get all the way down to 30, which would put you right in this 135 zone. So it could be maybe if people are looking at a long-term pickup, maybe throw some buy orders down there. So if the stock gets down there, you may pick it up for a good price, or even dollar cost average on this weekly demand zone, probably at the 140 area all the way down to the 135 area. Definitely something that you could be dollar cost averaging into as we're kind of getting down there. It definitely is something that I'd be on the lookout for, especially Johnson & Johnson. It's not a company that necessarily is going to go anywhere. It has very strong technicals from a very long-term perspective that they're going to be here. They've just been riddled with some scandals. My view of it is I do see a lot of supports, and then if you ever get down to the COVID lows of $110, it'd be definitely a pickup there. So now we're going to take a look at Lilly and Company. So the stock is trading about $328 at the time of the recording of this video. We are bouncing off of the 50 weekly moving average. However, we're below the 200 and the 50 daily. We actually kind of almost rejected off of the 50 daily, went below the 200. And now we're finding support around this region of the 50 daily. Now, if we break that area, we definitely have some gap fill pricing here that probably bring us down to our long-term uptrend, which was formed off the lows of 2022 and then the bottom on November 2020. So this is your long-term uptrend that Lilly has been basically in. If you break this uptrend, there is significantly more downside to the company that I see, because you have not a lot of support until you get down to 210 from a simple moving average perspective. But we have to look at what LuxAlgo is telling us on the chart to see where we could find price action zones for support. looking on the weekly first, we are pretty diverged, similar to Johnson & Johnson, with the MACD diverged bearish. RSI has significantly more room to go, and we could be heading significantly lower. We could be going to that uptrend for the bounce, which would target around, if we look at that, where that uptrend is sitting, about 315. So let's take a look at what we got in the 315 region. Not a lot of support from previous zones, but could be an interesting buy there to reconfirm and possibly curve upwards. If we look at the daily, you are in a zone right now, which would make sense because it's where your moving average is. Your MACD is crossed bearish, so that's why I do not believe that this move on the 50 weekly actually holds. RSI is crossed bearish as well, so I do suspect more downside from the company, probably looking at the 300 for the support, but you are in this reversal zone on the daily, so it really, I'd be looking to pick it up at that long-term uptrend. You've bounced there significantly before, and you're in this reversal zone, so you could see significant upside once it decides to reverse. However, because you're in this kangaroo, as I call it, between all these moving averages, to understand there's just going to be price volatility as you bounce around this, finding support, finding resistance, and it really isn't necessarily a clear-cut picture. I would look at bouncing off and holding above the 330 level, because that is where you're going to be above 50 daily as your next resistance point, where you have more support below. You would have your uptrend, your 50 weekly, and the 200 daily. For resistance levels, I'd be looking at the 360 level and then the 367 level as my two next resistance points if you have the uptrend, and of course your 50 daily moving average sitting at 353. So overall, some other areas of support, if you crack the long-term uptrend, I would say probably around the $300 range to 284 is where I'd be looking to pick up Lilly. On a long-term trending basis, you would probably be significantly oversold by that point. MACD would be really bearish, but then starting to curl back up. So it's definitely areas that I could see price going. Next, we're going to take a look at MRK. So MRK, obviously very bullish pattern on the daily. You broke below your 50 daily moving average and got rejected off before, came back up. Now you're reclaiming, you're above it by about 20 cents, which you want to see continuation now, but it's a strong claiming of that 50 daily moving average. You're significantly away from all your other support areas on the moving averages. You had this big uptrend that you could be forming a harmonic pattern, where it be your A to B, B to C leg, which would project MRK up to be about $132 if it completes. The way you complete this A to B pattern is you have to trade above your all-time high here, so def about $115. So the other thing that we need to pay attention to is if we look at our all-time high connect here, which is where we made our previous all-time highs, if you draw that trend out, you probably find resistance around the 126 level. You really have to see when this line and the price of MRK interact with one another to find resistance. However, this is significantly bullish in a long-term perspective. You're above all the resistance points. You're probably heading higher, probably heading for new all-time highs on MRK. Now, if you fail to hold this level of the 50 daily moving average, I'm probably looking at the 102 level as the next support, or the $96.73 as the second support, which is our 200 daily moving average, and then possibly $95 as your 50 weekly. And then your 200 weekly moving average is sitting down at $81. It would be your all-time support level once you break through all of these. Let's take a look at Lux Algo, what it's telling us for MRK. So it's basically saying you have a price action zone right at that all-time high. It makes sense, that's where you find sellers. You did make the MACD diverge bullish, so therefore you could see continuation, especially with the MACD separated so far from one another. RSI is heading up higher, not into overbought territory. So definitely reclaiming that 50 daily moving average is a high probability at this point. I don't necessarily think you could get to past all-time highs. I think you would have to push up, kind of get rejected around that region, and then come back down to find support. You do have a gap around the $110 region that you could have easy price action to continue higher, but I'd be also looking at the 112 region for resistance. Now, let's say we flip to the bearish scenario and go to where we would find support. I probably say on the daily be the $98 region, which if we go back to here, $98 would be your 200 daily moving average once it moves up a little bit. So definitely a strong bounce point at $98. As you can see, Merck's been a massive uptrend. I do think price is going higher. Let's take a look at the weekly just to see if that can be confirmed. So you did have this pullback here on the MACD for Merck on the weekly chart, but you are starting to curl back towards one another. RSI was overbought, but now kind of returning back to an equal evaluation. There is a strong case for the upside here. You have an ABBV pattern, you have MACD on the bullish side and starting to curl back up, so it could probably reclaim another all-time high and head higher, completing that possibly A to B pattern. So definitely something to be on the lookout for. I overall looking very bullish on Merck and probably seeing a continuation into that $120 region that we talked about before. So next we're going to look at ABBV. So taking a look at ABBV's stock now, you did have somewhat of a bearish breakdown where you had that big sell-off back in the start of 2023, and now you're starting to reclaim your 50 weekly moving average. You are above the 200, but because the 200 is below the 50 weekly, that's a little bit of a bearish sign. You have the 50 SMA sitting at $155. That'd probably be your next retest of resistance, especially because there's not a lot of price action here. This is going to be your resistance point if you break through it. I do see you could continue up to $161. What is concerning a little bit is that AbbVie's been sitting in this almost wedge pattern here, that massive wedge pattern that if we look here, drawing it out basically from big connection pieces, and then using the double peaks there, you are in a almost symmetric wedge pattern, which if you break to the upside, you probably have a massive upside, or if you have a massive downside. If we do a conservative estimate here of where this could breaking positive, you're probably looking at $200 for new all-time highs. Breaking lower probably brings you down to this 200 weekly moving average, and that's where you would probably find support. You're definitely going to find support on the way down here, but it definitely looks more bearish skewed because you're playing in this kangaroo. Now let's take a look at what Lux Algo is telling us. So on the weekly, this is promising. So if AbbVie can hold this region, I definitely could see this MACD crossing back bullish and curving towards one another. RSI actually isn't in the bearish territory. It's sitting right around the neutral area. So there is a possibility for this curvature to continue, and you really don't get that selling pressure until the RSI goes to the below 50 standpoint and heads to oversold. However, there is the potential for downside. Now let's take a look at the daily and see what it's telling us. So you have a divergence on the MACD bullish, so you could see that continuation higher, probably tackling maybe that 50 daily moving average. RSI is on the bullish side, diverging from one another, so you could head over to that overbought territory soon, maybe at the 50 or claiming higher. Really depends to see where it's gonna go. First resistance point would probably be that 50 daily moving at around $155. Next resistance points would probably be $164. Start of that zone that you had the big sell-off. Next support, which we did bounce off of, was $143.69. I wouldn't be necessarily seeing that area hold up again once we retest it. If we break below 200 day and the 50 weekly, sitting around the $150 and the $149 region, I'd definitely be looking for a $138 retest on AbbVie, finding this price action zone, or even 130 again. 130 would probably bring you down all the way here, completing this symmetric wedge to the downside. And once we break basically below 143, 145, I'd definitely be looking for more downside, targeting 111 or the 200 weekly moving average for AbbVie. However, it's a split case, so it's almost you want to see how this plays out. It's not necessarily the best buying point right now because you have upside and downside. If I start seeing this MACD cross a little closer to one another, probably give it 1 or 2 more weeks. Definitely be looking to see if you get some more bullishness in the company and possibly tackling these upper price action areas. So next we're going to look at Pfizer. So taking a look at Pfizer real quick, it is a pretty bearish out view on the company. You have the below the 50, below the 200, below 50 weekly, and you're heading towards that 200 weekly moving average. You actually haven't gone there yet, but you don't got a lot. You got about what? From current price to there, about 3.5%. If you break that 41.53 region, I don't see a lot of support until you get down into this $40 region, $39 region. And if we take the big sell off here to see if we got any harmonics, we come down to $40.18, completing that harmonics, which probably breaks this 200 weekly moving average, where you're not probably going to find support. So really it's going to come down to, do we find support in this $35 region? Just looking at it, that's where I think Pfizer is headed. And also you have, it's just a very ugly graph. There's not a lot of bullishness in this. I see more downside. You're below all the moving average. You're heading to your last support. You're really going to have to use the supply and demand zones to trade this, because you're heading dangerously close to your final support around the $41 region. Let's take a look at what LuxAlgo is telling us. So on the weekly, you are in that area of support. You have a zone between the $42 and the $41. Next zone, $39 and $38. Your MACD is crossed bearish, with maybe curling towards one another, but because you're so diverged, I don't see that 200 weekly holding. I think this MACD is going to continue. RSI still hasn't gone to oversold, so it really hasn't formed a true bottom. Ideally, I would be looking at that $33 region, because you'd be in the reversal zone, price action zone, and MACD most likely would start to kind of climb together there for the weekly. And then if we look at the daily, it's just bearish, guys. There's no denying this. You're heading towards a support zone of that $42 region. However, MACD is crossing over bearish. Your RSI could enter that oversold. So you have a definite possibility for selling off and not finding support on that $41.53. And if we look at where that lands us, it's right towards the bottom of the zone. So if we invalidate the zone, invalidate the 200 weekly, I definitely be looking for more downwards prices in Pfizer, probably coming back to that weekly area of that we just discussed of the $39 region, or even that $33.56 region, which would be a significant price cut from where it is now. That would estimate it to be, from current price down to here, a 20% downside. However, if you got down there, you would have significant decrease in price, and definitely a strong pickup at that point. I think that you'd be so oversold in the reversal zone on the weekly. MACD would be so downward that it'd definitely be an interesting point to buy Pfizer there. I think that out of all the companies we've gone today, Pfizer is the highest risk one, just because you're heading towards your lowest support, and then you're using price action zones to buy below that level. Considering looking at like ABBV or Lilly, it's two stronger companies that I'd be looking at. So do your own due diligence of where you think the company is going, what you think the fundamentals are, and kind of see what the price is telling you. I think in this sector, there's definitely money to be made, but I think you have to be patient, especially with how the whole market's moving. If you're going to have a bull run, you're most likely going to run in tech and higher leveraged companies, or if you're going to have a downturn, probably energy and commodities would be the way to go. I think healthcare has its place in time, but it's going to be affected by the market. Now, if you guys like this type of analysis, throw a comment down below of what you liked. Hit the like button if we greatly appreciate it. It helps the YouTube algorithm out. And if you guys like to see more of this type of content, we try to cater it to our viewers. Hit the subscribe button and throw a ticker symbol down below. And if you want fundamental or technical analysis specifically, just throw it down below, or we're going to assume we want both. So we'll give you both. So without further ado, I hope you guys have a wonderful day, and we'll see you tomorrow morning.